At 2:17 a.m. in London, deep underground, behind layers of concrete and steel, a vault door opens. No cameras, no reporters, no headlines, just pallets of gold bars being quietly moved, not by billionaires, not by hedge funds, but by central banks, the same institutions that once told the world gold doesn't matter anymore. Yet today, they're buying it again, in massive amounts, and they're doing it silently. Because when the people who control money start hoarding something old, heavy, and unproductive, it usually means one thing: they don't fully trust the system they created. And that should make you pay attention. For most of your life, money has been invisible, just numbers on a screen. Swipe, tap, scan, done. You don't see it, you don't touch it, you just trust it. And that trust is the foundation of modern money. Every paycheck, every payment, every saving works only because you believe those numbers mean something. For decades, central banks worked very hard to protect that belief. They told the world gold is outdated, paper money is better, digital money is the future. And after the 1970s, money stopped being linked to gold. It became linked to confidence, not metal, not limits, just trust. And for a while, it worked. The world grew, markets expanded, technology exploded, people got richer, and money flowed easily. Everything seemed stable. Then something changed. In 2008, the global financial system almost collapsed. Banks failed, markets crashed, jobs disappeared, and suddenly the system that looked strong was hanging by a thread. To save it, central banks printed trillions of dollars. At first, it was emergency medicine, like giving oxygen to a patient in shock. It was supposed to be temporary, but it wasn't. After 2008 came more crises: pandemic, wars, energy shortages, supply chain breakdowns. Every time, the same solution: print, borrow, repeat. Print more money, borrow more debt, push the problem forward. By 2024, global debt crossed $300 trillion. That's not a typo, 300 trillion. More than the world can realistically pay back. And that's when something interesting happened. Gold came back. Quietly, central banks started buying it. Not hundreds, not thousands. Over 1,000 tons every year. China, Russia, India, Turkey, Brazil. Not small countries, not poor countries, major global players, all doing the same thing at the same time, without big announcements, without celebration, just quietly stacking gold. So why? Gold doesn't give interest. It doesn't grow. It doesn't produce anything. It just sits there, heavy, shiny, useless, unless you're worried. To understand why, you need to understand how the system really works. Most global trade runs on US dollars. Oil, food, technology, shipping, everything. Countries earn dollars, then they save those dollars, usually by buying US government bonds. These bonds are basically promises, a promise that says we will pay you back later, with interest. But here's the problem: a bond is only as strong as the government behind it, and governments today are drowning in debt. Inflation was the bill coming due. Years of money printing finally had consequences. Prices exploded, living became expensive, savings lost value, and now central banks are trapped. If they raise interest rates, debt becomes impossible to pay. If they lower rates, currencies lose trust. Either way, someone gets hurt. So they needed something that doesn't depend on promises, that doesn't depend on politics, that doesn't depend on anyone. That thing is gold. Gold doesn't need a signature. It doesn't need a government. It doesn't need approval. It just exists, and its value is recognized everywhere. That became very clear in 2022, when Russia's foreign reserves were frozen, hundreds of billions of dollars blocked overnight, gone, because of politics. That shocked the world. It sent a message: your money is only yours until someone stronger says it isn't. Bank accounts can be frozen, assets can be seized, currencies can be blocked, but gold? You have to physically take it, and that's much harder. So countries learned, and they adapted. They started buying more, quietly. Gold became insurance, not for profit, not for speculation, for survival. Now look at the contradiction. On television, central banks say, everything is under control, the system is strong, inflation is temporary, don't worry. But their actions say something else. Their actions say, be careful, prepare, just in case. They're not predicting collapse, they're preparing for shocks, for instability, for a world where power is divided, where no single country controls everything, where currencies compete, where sanctions are common, where alliances change. In that world, neutral assets matter, and gold is the most neutral asset ever created. So here's the final question. If the people who control money don't fully trust it, should you? They'll never answer this directly. They won't hold press conferences about it. They won't make headlines. They'll just keep buying, behind steel doors, in underground vaults, while most people hold paper, hold digital numbers, hold promises, and hope those promises are kept. Because in the end, gold isn't about getting rich, it's about not losing everything. And when central banks choose safety over profit, it tells you exactly what time it is.